in through most of the sessions, just a quick 25-minute, I find hour-long classes, okay? When you're in a mastermind, it's a little different. In a mastermind, you're focused, okay? But this is live trading, and I was trying to give you guys kind of bite-sized chunks, over the last couple of weeks in terms of education. Again, I am going to do a live trading session tomorrow, and a big portion of my live trading session tomorrow is going to key into these expected move type butterflies. Okay, it's become like the object of my affection right now in terms of trade. I think it's critically important too. It's like, look, there's a new strategy that opened up because of these zero DTE options, and I am all over it and hitting stuff left and right. With that, I've got special guests now, Gianni and Professor Jeff Bierman. Okay, the duo together. Who's driving? Are you driving or is he driving?
I think Professor's driving.
I'm driving the car, but Gianni's just going to have to drive most of the content.
I don't think you have
I'm
your camera on there, big guy. I don't think you have your camera on there, Jeff. Huh? Yeah, Jeff.
All right,
Jeff
well,
needs...
give me a second. Give me a second.
Boy, what are you new? What are you new? Huh?
I'm just look away. I'm hideous.
Well, that, and sometimes like the giant cat's behind himself, like licking himself. Okay, although Gianni has enough hair on him, he could be the cat. It's okay. Whatever does it for you. All right. What are you looking at, Gianni? Huh? You still bearish? Bearish in overall markets? Really?
Yeah. It's all the defensives keep leading, tech's lagging, and Mag 7 looks like it wants lower. So I can't be a bull in this environment near term.
Wow, I'm speechless. It's hard to get me to be speechless too. Jeff, you're going to be the host now, Jeff. You can run the show over here. But all right, so you're a little bearish. What might change your mind? Like if tech gets a bid under it, does that change your mind, change your outlook?
That's definitely step one. Yeah, we need to see that. I think the Mag 7 showing some strength again. Apple and Nvidia have been all right, but you look at Microsoft, you look at Amazon, Meta struggled for several months. There's some big issues on that front. So, I talked about it yesterday how 10 stocks make up 40% of the S&P. So, you don't have to go through 500 stocks to know what's going on. You can go through 10.
In all fairness, though, like Apple isn't Apple. Apple is like a bond. They're buying Apple for the reason it's more like a bond.
That's well said.
It's like somebody that isn't, with $100 billion of capex a year. It's like some of the numbers right now, like, do people not even pay attention, like how much they're really spending? Like some of these tech companies, they just don't care. They just, we're going to spend everything we possibly can. Debt be damned. They're selling bonds. Google's selling. Is it Google that sold the 100-year bonds?
Yeah, it was Google. Yeah.
Oh, lovely. Because 100 years is going to make all the difference.
Don't forget Disney.
Oh, Disney have been degenerates for years.
Yeah.
I mean, look, Disney's probably not going anywhere.
No.
But what's the life cycle of a company? Like 40 years. Okay, the rise and fall of some of these companies, it's about 30, 40 years. So hey, here at TheoTrade, we're 10 years old now. Theo is 10. All right.
Hey, it's something that I'm finally older than.
Oh man. Okay. I'm gonna warn you about something, Gianni. For the first 20 years of my career, literally 20 years of my career, I was always the youngest person in the room. Always. Okay. And now you little bastards are coming out of nowhere. So but it cracks me up a little bit. So my kids, their generation, which I have an 11-year-old, a 13-year-old, and a 16-year-old, they realize how screwed up their generation is. Okay. It's the greatest part of like having kids that are fairly sharp. Okay. They realize, like, they even make fun of their own generation. Like, our generation can't even go outside and play because we're too stupid and may get run over. I love that kind of crap. Yeah. It's good stuff. I'm going to turn it over to you before I get myself in trouble over here. Jeff, Gianni, it's all yours.
Thanks, Don.
All right. So Gianni, let me kick this off by saying good to our listeners. Good morning and welcome to the second hour of TheoTrade. I'm Professor Jeffrey Bierman, and I'm joined today by, I'm going to call him Dr. Gianni Di Poce, because he actually isn't a PhD, but he has written a book. I don't want to embarrass him on econometrics, but I got to give him credit that there is an academic angle to this guy who comes
Oh,
from the middle of nowhere in Detroit. How are you, Gianni?
well, I'm not as cold as I was about a week ago. We finally got a little bit of a thaw going on, and I'm heading down to Florida this weekend, so I'm ready for some sunshine.
Oh, really? Northern Panhandle, Southern Miami, kind of.
Sarasota, baby.
What, you got a place down there, or you got family? What's the deal?
No, it's just our spot that we like to go. I've been doing Sarasota like once a year since like 2022, I think. So we
Uh-huh.
went there and it's just a nice, small classical American city, very clean on the Gulf side. So I like it a lot.
Great. Okay. Well, I just want to let our listeners know that we couldn't be more opposite in so many dimensions between the differences in age, the differences in he has a beard, I don't. He is more of he likes the high beta stocks, I like the low beta stocks. His strategy's different. The way he views the market is different, but we share one thing in common. We do recognize when markets are in a topping and bottoming formation. And we can agree here that we're close to a topping formation. And you can't, Gianni, I'm not going to waste my time with price. That's just stupid. Price doesn't matter. You have to pick it by time because it'll break at a certain point in time. And when you look back on it, you'll say, oh yeah, didn't it break last time, this time last year at that time, or this point in time? So I put a premium on time. But before I go forward, I gotta make Gianni laugh at this. So I come in here each day with a theme,
Yeah.
and I have to like colorize the theme because I got a picture. So today's theme you can see on your screen is air compression. I call it air compression. I think Gianni knows where I'm going with this for the other people out there. So the definition of air compression, like what is air compression? It's the process of increasing the pressure of air by reducing its volume, and it is commonly used in various applications, including pneumatic tools and inflating tires, like your tire pump.
Yeah.
So it involves taking what's called ambient air, which is like inactive air, from the surroundings and discharging it at a higher pressure. And the process converts mechanical power from an electric motor, diesel, or gasoline engine into potential energy stored in compressed air. So I'm wondering in Detroit whether Gianni, because he's like a farmer, whether you go out in your in your yard and you pull out, I don't know, there's all kinds. There's a DeWalt,
Yeah.
there's a Black and Decker Stanley. This is an air compressor, right? So the reason why I'm going this way, Gianni, is because every day I walk in here, we're in this like box, but the box feels like an air compressor, which means it gets tighter and tighter and tighter. The liquidity then is jammed tighter and tighter and tighter. So you jam it up 40 points. And by the end of the day, it's like the tire itself is deflated and it just comes back down. So every day it's zero DTE, bidding, buying 52-week highs, selling 52-week lows, crushing the waterfall, buying the vertical, to be damned with fundamentals, Mr. Di Poce. Nobody cares. And don't even,
Fundamentals.
Johnny, please don't bring in the idea of rotations. There are no rotations. There are none. They're
There
buying
have
the
been.
same crap every day and jamming it higher and shorting the same crap every day and driving it lower. So with that said, how much time have we got before the market just decompresses? You like that pun there?
Yes. Well, I think we're maybe a couple weeks away max. I mean, I could see us actually bottoming out by the end of the month, by the beginning of March. And I think we're really, basically walking on the ledge right now. I mean, tech is getting hammered again today. All the defensives are leading, staples, utilities. This is just not a bullish environment. I don't really know how else to say it. I always, received the compliment, I'm going to say, of being a perma bull. But I'm not. I'm
You're not a
not.
perma
It just
bull.
no. I say like it was always tongue in cheek. Don
Oh,
was big. Oh, you're a perma bull, and I'm like, no, I'm not. But no, we have risks in this tape right now. And last week Staples blew everything out of the water. They were up over 5%. You and I were talking about that. I mean, sorry guys, when consumer staples bid 5% in a week and tech is flat to down, that's just not a healthy environment. This week, utilities are doing well. Now, even this morning, coming out of the gates, you had industrials leading, but they fizzled out. Now you have utilities leading again. And so I have to respectfully disagree with you on the idea there isn't a rotation happening because there is a rotation. We've been out of tech now for about like 6 weeks. Tech hasn't done anything. Tech topped at the end of at the end of October with the Mag 7 and, the NASDAQ as well. So tech has issues, and this market lives and dies by tech. We're just not going anywhere as long as tech remains range bound and chopping around.
Well, tech is range bound. You can see I have the XLK up for you.
Yeah. Yeah.
And semiconductors are doing well. Like
Yeah, they
micro
are.
well, and advanced micro is doing okay. It's holding up, and Intel's actually doing its part. But it's really the software that's kind of fallen really out of bed here. Like
Absolutely.
that's the real area where you got disappointed by Oracle, and that's having another kind of like not a terrible day, but it's kind of retracing backwards. So you got Oracle dragging you down. You got Microsoft, which broke, and it's kind of dragging you down and
Yeah, that's a
weighing
big problem. Yeah.
and then you have CRM, Salesforce.com, customer relationship.
Terrible. Look at that. Wow.
That looks absolutely terrible. And they're just,
Yeah.
like I said, Jenny, they're just shorting into oversold or selling into oversold, and they just don't care.
Yeah.
At what point let me ask you this. If the consumer staples roll over, and if industrials roll over like cat and deer, because cats just, that really bothers Don. It doesn't bother me because I'm not short, but it gets kind of stupid after a while.
Yeah.
There's no value here. This is just, I'm shoving capital in here because there's nowhere other than what's going up. At what point do industrials and consumer staples back off? And if tech doesn't pick up the slack on the other side, is that the end? Is that it?
It would be, yeah. Well, so I think industrials are going to back off before consumer staples. You actually were really early to that theme on consumer staples. You started buying staples. What was it, like a month ago?
Yeah, I was way
Like
ahead
pretty,
of that one.
yeah. So that was a good trade. And now it's a situation where like I like staples, but it's kind of run too far for me to chase it at this point, because if you do see the broader markets roll over, everything's going to come down. Oil, staples, industrials.
Right.
And so what you're seeing now, the leadership from utilities, the leadership from staples, that is late cycle behavior.
Oh
Okay.
yeah.
You don't see these sectors lead in the early stages of a bull market. You see them lead when things are starting to crack. And we saw tech top out months ago. Tech leads. Tech bottoms first. Tech tops out first. So this is very run of the mill, very traditional, very normal, very routine. I don't see anything unusual about what's going on right now. And I'm bearish near term, but tell you what, Professor, this is setting up the biggest and best buying opportunity of 2026. I think it could be as soon as a few weeks from now. So I think that's where the big money is. I'm like 95% cash depending on the portfolio. I'm hedged, and I'm just, chomping at the bits to get back in this thing once we get a decent correction. So, I don't need to buy the absolute bottom, but once tech starts to show some relative strength again, that's what I think the signal is going to be.
Gianni, you know me. I got my eye on tech. Like that, I have a watch list. I have like my favorite like shopping list of tech. I've already built it on my desk. I'm just not putting it out there yet because I need to see a lot further correction in the S&P before I commit to doing it. But once the S&P corrects 10%, Gianni, all my capital is going to be shoved into technology. Literally every trade will be a technology trade. So
yeah, I mean this isn't over. It's not over. I mean,
no.
We had a 20% correction last year. I'd like to see, it can vary, and the NASDAQ might be down more than the Dow. I mean, the NASDAQ in theory already corrected like 8% from that high in October to that low in November. I'd like to see that low retested. So, maybe a 10%, 15% pullback in the NASDAQ. The Dow might not even drop 10%. It usually doesn't fall as much.
Right.
But I think you got to buy the dip. But what I want people to be prepared for, and you're going to talk about this in a little bit, so I don't want to jump ahead, is get ready for the AI hysteria. Oh, it's a failure. All these companies are going bankrupt, this and that. Let's get the fear elevated. Then you have to be ready to pounce.
Speaking of that, like my first headline is, and I either you give me a thumbs up or thumbs down on the pun. I call this the pain train. Okay. So B of A comes out with data every week, and most of the time I ignore it because it's just skewed garbage. Don ignores all news. I ignore most news. I listen to like 3%. B of A's data show that the middle class is now feeling the pain of the K-shaped economy. How long can and explain to our viewers, what is a K-shaped economy and how long this might last before it twists the other way? Instead of looking like a K, it looks like an upside down kind of like W at this point.
Sure. Well, I mean, K-shaped economy, what does the letter K look like? You have one line going up and one line going down. You know, the line going up is the top 10% of income households. It's the asset owners, and it's the people that, you know, can weather out a storm and have clean household balance sheets. Middle class, you know, that's where I grew up, Professor. You know, I
Yeah.
didn't grow up poor, didn't grow up rich. There's a lot of keeping up with the Joneses. There's a lot of paycheck to paycheck living. A lot of the equity that people have, you know, they're not poor, they're middle class, right? It's tied up in the homes. You know, these aren't people that are necessarily actively trading markets. They have a 401k. You know, they might put 5% of their paycheck in there. You know, look at it when the market's down, freak out, take out hardship withdrawals, borrow against it, that type of stuff. You know, that's kind of like the middle class, you know, mentality, if you will. So, you know, but they like to spend. You know, it's a lot of status purchases and stuff like that. You know, I come from that world. I know what it's like. And yeah, I mean, when you know the spending gets tough, you know, people get angry. And so what would help the middle class? Well, I think lower oil prices, lower interest rates, that would help because you know people they'll refinance their homes. They'll, you know, go out and borrow a new car because when people are buying stuff like that, they're buying the payment. Like when they buy a home, they're not like, oh, you know, how much debt is enough for me? No, they just look at the monthly payment. I'm not even saying that's right. That's just what they do. And so, yeah, I mean, I actually think this year will be all right. I don't think it's going to be, you know, the worst that the middle class has ever gone through. But yeah, I think we need to see energy prices lower, rates lower, and you know, if we get some sort of liquidity event here in the next few weeks, that could be the catalyst for that to happen.
You know, you and I disagreed a few weeks back on energy, and I was ahead of the curve and got long. But
Yeah,
I got to let you know, Gianni, I cut out. Like I listened to you. I was like, yeah, it'll probably go to 65 or 70 a barrel, but at that point, the government's going to push back and go, nope, nope, nope. Got to push this
yeah,
thing down again. Got to get OPEC to, you know, open the floodgates. So I basically liquidated Schlumberger. I liquidated all of Devon. You know, I was Gianni. I can't play penny wise and pound foolish. People send me goes,
yeah,
why'd you sell here? Because I'm up 25% and I got to scale back because my weighting's too high. Not to
yeah.
mention, you know, it could swing all the way back. People act, Johnny, as if these stocks that go up never come down. So I
Right.
scaled out of 2 of my 3 full positions and then half of my Oxy because Oxy reports next week. Because I'm a trader, Johnny. I'm a trader.
Yeah.
I buy, I sell, and then I go back in and buy again. I don't sit there buy and go hold, hold, hold because what comes and goes comes off easily. So I don't think that the oil prices are going to go that much higher than where we are. It might go to 70, but I think the government's going to step in and do something to drive it back down. What say you?
I'm with you. I'm with you. And it might not even necessarily be the government. There could just be some sort of liquidity event. Again, when the bottom falls out in markets, when stocks really correct, nothing is safe. Staples aren't safe. Utilities aren't safe. Everything falls. And so, you know, that's what I'm kind of leaving the door open for. I obviously don't know what it could be. But you know, you look at the price of crude oil today. I mean, you had that lower high that formed yesterday. You're selling off today. Bonds are bid. There's a lot of flight to safeties playing out in this market. You know, between
Yeah.
the yen surging, staples surging, utilities surging, bonds surging, now oil selling. You know, it's just one. This is one of those environments where if you can sidestep the majority of this pullback and you get in at a reasonable time, that's going to make your year as long as you don't do something stupid.
I
So
think
there's a huge opportunity right now, and I think the biggest opportunity is in waiting right at the moment, actually. So, yeah, I mean, how much longer can energy's strength last? Based on where we are in the cycle, I don't think much longer. I'd be booking some gains here if you have a significant exposure. If you have a small exposure, just let it run. I think, but you know, the next low that forms in crude oil, that could be the big one. So that's what I'm looking at.
I'm I cleaned up 80% of my holdings and I got short the railroad. So I'm short KNX, which is getting blown out today. And I'm short CSX. Johnny, there's no reason why these stocks are trading at these levels, both on a valuation basis and on a growth basis, because they don't really have any growth. So that's where I'm
Yeah.
positioned. But I wanted to move to my second major catalyst. Love to get your feedback on this one. No pun intended, but there's a pun here. So if I don't get a smile out of you, that means I didn't connect with you. I call it domestic struggle. Remember when the police go to your house? Gianni, we got a report that you and your wife are having problems. You got a domestic struggle. So I call it domestic struggle for this reason. This was reported yesterday on Bloomberg, by the way, Bloomberg is becoming less and less bullish and a little bit more mainstream. You can't watch CNBC because it's always bullish, but
Yeah.
mortgage delinquency rates for the lowest income family areas spiked to the highest level since 2016. Now, Gianni, I'm not looking for a bomb. I'm not looking for a white swan, but isn't there something lurking here that's telling us like, hey, people like, it's a K economy. Don't worry about the 90% at the bottom. Just worry about the 10% at the top.
Right.
I'm sorry, it's too bottom heavy here. Should this weigh on banks or am I wrong?
Yeah, I mean, look at financials. They're getting hammered. They are. I mean, here's the thing. When people say, don't worry about the bottom percent, yeah. Don't worry about them until they show up at your house with pitchforks and torches, right?
Right.
I mean, like, that's real life, right? Like, read history. We're all in the real world here, right? Like, this
Right.
this type of stuff has happened before. So, yeah, I mean, I say that like with the utmost sincerity. Like, you can't just have a world where like that. I mean, that's literally what the third world is, right? You have the people that own all the businesses and all the companies, and they live great, tennis courts in their backyard and all that stuff, and the rest of the people live in shanty houses, and that's not what America is, obviously, and that's not where I want it to go. So K-shaped recovery, yeah, that's not sustainable in the long run.
Yeah, I'm looking at this and I'm like, I mean, it's almost like Wall Street plugs its ears. It's like blinders on going, we don't care about Main Street. All we care is about what happens on Wall Street and the rest of the world, to hell with you. And I feel like at some point, like the average person is sitting there going, I'm out of a job, but I got a 401k making money. And they're
Right.
like, well, at some point I want to revolt against Wall Street and take my money out of my 401k. I'm going to put it back into crypto. I'm going to put it back into bonds. To hell with stocks, because we're in some sort of bubble. I don't like pushing Don's agenda, but I believe we're in the bubble of everything. I do. Maybe you don't agree with that, but just based upon my academic and professor background, we're in the bubble and everything. But the good news is they started to diffuse the bubble in crypto. They've completely, there is no bubble in bonds anymore. That's done with.
No,
If
definitely
anything,
not.
bonds
No.
are underpriced now. And
Yeah.
then they haven't diffused the bomb yet in the precious metals or equities. And I feel like once you blow those out 25 or 50%, I think it's going to be the buy of a lifetime. I think people are going to look back going, why didn't I sell at 7,000? I just know one thing. Garrett's right. Just buy low and sell high. That's what you and I do. I don't buy high, because buying high means that if you're wrong, there's no way to hedge this off. Whereas if you buy low and you screw up, you're like, I can either ride it out, or I can just sit there and go, take a small loss. But most people won't do that. They just keep buying high because they feel like they're being left behind. And I feel like you're not being left behind, because it just takes one bad day in the market to blow this out, which leads me to the last discussion of macro. So I'm going to let you run with this for 5 minutes. Every friggin' headline, I can't stand it. I heard in the gym today. I was working out and there were people talking about this in the gym. I call it, who's next? Real estate services stocks got completely dismantled yesterday. Completely. Because all there was a narrative push saying, well, the next AI scare trade. And what they mean by that is that AI is going to displace, because it's based upon Gemini, it's based upon Claude, it's based upon ChatGPT. All these apps are going, well, we don't need these anymore, these full service type of corporations and operations anymore, and that it's going to become passe. So check this out. I couldn't believe I saw this, because I walked by all these properties, and CB Richard Ellis, which originally started in LA. I don't know if you knew this. It started in LA.
I didn't know that. No.
It was called Ellis and Associates, and then there was Richard and Associates, and they joined forces in LA, and then they became public, and then now they're like billionaires. One of them's already passed away. So CBRE is this gigantic, and they're at an all-time high. CB Richard Ellis financials. They push the narrative, and the next thing you know, the stock is down $45.
Yeah.
I have got to talk to you about this. And here's this. Ready? So Zillow, you know Zillow, right? Zillow Group. Here's Zillow Group, right? Another bump. The stock was already crushed. Then they report, right? And they beat the estimate, and people weren't even listening. Like, what estimate? All we heard was the narrative, AI is going to ruin their business. Please, for 5 minutes, talk this thing up and make it make sense. Seriously.
Well, where do you want me to start, on Zillow or just CBRE?
Any of them. I pick any one you want.
Well, so pull up these charts too, because it's sector wide. So there's CBRE, there's JLL, and then there's CWK as well. So
Oh,
there's
geez.
Jones, Lang, LaSalle, and then CWK is
Cushman Wakefield. Yep.
Cushman and Wakefield. So yeah, they all got blown up. So these are commercial real estate stuff. Honestly, the societal disruption. How do you get around this? I mean, I guess there's gonna have to be like massive nationwide rezoning, right? Because a lot of these properties are not even zoned. They're zoned for commercial stuff, right? So if AI really disrupts like all of these big companies, these big tech companies that, we're in the software business and they go bankrupt, well, what are you gonna do with all those buildings? I guess you got to repurpose them into residential apartments, and then, I guess when we're all living off the dividends of AI, you're just gonna get put into one of those, bug pods, and that's how we're gonna live, right?
Sorry.
Eat your Soylent Green and shut up.
Yeah, he's Soylent Green. Charlton Heston. That was a good move, by the way.
Yeah, it is.
So
Yeah, no, it's crazy to see this going on, but what is kind of perplexing at the same time is how bonds are bid. So you have home builders surging at the same time, but I don't know. It just seems like there's a lot of disruption happening at the corporate level. I don't think it'll be as bad as like the residential real estate, because people need a place to live still, right? I'm joking when I say like we're all going to live in the pods, but you look at these big office buildings. I mean, here in Metro Detroit, there's like that city of Southfield, which is like on the periphery of Detroit, and it's just like there's like these mini skyscrapers, and half of them are empty.
Wow, interesting
Yeah.
stuff. Like I'm just like dumbstruck, because who's next means, okay, so they went after the real estate services companies. I'm asking you, who's next? Like, is somebody else going to report? Are the banks going to report? Uh-oh, AI scare trade. Let's sell all the banks down 40% and crash the XLF. Oh, wait, AI scare trade industrials. There goes CAT down 300. Who's next?
Yeah.
Who you
Well,
got?
let's see. You have what do you have on the screen there? You have XHB.
Yeah, I got
So it's crazy how that's doing well. But pull up the financials again, XLF, because today's big. Today, are you on the weekly? Can you go to the daily, please?
Yeah, I'm on the weekly. I got to get to the daily, which is we'll catch it. Hang on. 3 month. There you go. Oh, it's
Okay. So this is big. I'm a charts guy. I'm a technicals guy. Okay, so you had the all-time high that was registered early on in the year. Okay, January 6th, all-time high in XLF. Great. All-time highs are bullish. Then you pull back. You pull back into that low in the end of January. It was actually January, I think it was 29th, January 28th, January 29th. That's when I came out and I said, "Hey, I'm bearish." It was a big headline. I said, "Hey, there's something wrong." And it was because of tech mainly, but now I'm seeing this. So you had that corrective rally from that January 28th low, and you rallied into that high of February 9th. Why is that a problem? Well, because that's a lower high. That's a lower high. Okay. Now, today, you've taken out that low from January 29th. So now you have a series, the first series of a lower low and a lower high. This doesn't mean that financials are blowing up and going to zero. Okay. But it does mean that bulls have lost momentum. They no longer control what I like to call the integrity of the trend. Okay. It's disturbed. It's mixed. So where do you go from here? Well, the first area to look for is that low from November 20th. Okay. Right around 51 bucks. You hold that support. Okay, fine. Maybe it's not the end of the world. You break below that, things are going to get messy. So financials rolling over, tech having, being bearish. Those are usually the ones to top out first. So like I said, this is very normal, very run of the mill. I've seen this story played out a million times before. And, you're going to want to see these ones kind of find some support before the rest of the market does. And, we'll go from there. But yeah, I mean, and this does tie into what's going on in bonds too, right? Because, I gave this explanation yesterday. If you have, picture this like my hands as the yield curve. You have the Fed that moves, rates in the short term. They're not moving now because Powell apparently has it all figured out, even though I think they should have been cutting rates for a while. So you have long-term rates that are higher than short-term rates. That's healthy. But now you have the bid in long-term bonds because the market's realizing something's broken and something's going on. the curve is flattening. That's not good for financials because it hurts their spreads. What do? They borrow money from the Fed and they lend it out. Okay, they borrow money for lower rate of interest, they lend it out for a higher rate of interest. If they're, borrowing money for a lower rate, or if they're borrowing it for the same rate, lending it out at a lower rate of interest, that's a problem for the Fed, problem for the banks. That's less profit margins. So yeah, I mean, it's not surprising to see financials weak with bonds bidding and rates coming down, and all this stuff on AI. Who knows how much money they lent to these data centers? Who's going to go belly up? Like you said, or Don said, Google 100-year bond, Disney 100-year bond. You know, uh, I wish our government would do a 100-year bond, but I don't think they're going to.
I don't.
So
I think you're daydreaming, dude. I think
yeah,
that ain't gonna happen in any lifetime. But yeah, I'm thinking to myself, like, every single time. Remember during like the Liberation Day, every narrative that came out, everybody's like, oh, another narrative tariff, let's sell.
yeah,
Now
right.
the new buzzword is, the new frightened word is AI. Oh, there's an
Yeah.
AI. Boom, stocks down 40%. Like, when is this going to end? Like, you can't live on narrative. You got to live on fact and not narrative. And the market itself right now is so algorithmically driven that it only matters on that narrative when the algorithms are trading with you. Because if you say that narrative where the algorithms are bullish, it only even drives it higher because it's so momentumized. You ever notice that, or is it just me?
Absolutely, yeah, absolutely. I mean, momentum feeds on itself, right? That's
It
like
does.
physics 101. So now the momentum isn't to the upside. I think it's shifting to the downside. Like we haven't like fully broken at the index level. Like, I do want to add context to this. I'm coming off like more cautionary and bearish than I normally do, but we're still, the Dow hit a new all-time high this week, right? The Nasdaq's a couple percent from the all-time high. So it's not like the world's falling apart. And I don't think it's going to. But we're traders, right? We're looking to capitalize on these swing moves in one direction or the other. And, the weight of the evidence is pointing to a swing move to the downside. Now, whether it's just one wave lower or multiple waves lower, we have to reevaluate once you get that first wave lower. But like I've said, I've seen this story played out a million times. And, I don't see like a crisis right now. I just think we need a sentiment reset. I think we need to scare the hell out of everyone.
I
And then
do
we
too.
can start to rebuild from there.
I
So
couldn't
it's
agree
going to
more.
start with tech. Like you said, like tech is the AI narrative is what's leading it lower. But pull up, I like to look at the MAGS ETF, MAGS. I think Roundhill, they put that out. I actually know the CEO there.
Yeah.
Used to do some collaborations with him back in the day. Dave Mazza, good guy. But I love this ETF because people always say, oh, it's 7 stocks in the market. And it's true. Like a couple of years ago, that was a big talking point when stocks were hitting new all-time highs. It was always, oh, it's 7 stocks. Every other stock sucks. Okay. Well, now those 7 stocks suck. So obviously that's going to weigh on the index, right? You can't
Yeah.
have it, one way. It goes both ways.
It does. This, to me, I'm a technician, and until we get through that zero line down here on the MACD weekly, the trend is still up. But if you get through
Yeah,
that zero line to the downside and you take out that 57, 58, okay, that's when the algos attack. They
sure.
attack once the trend is broken. They don't attack once the momentum is broken. They attack when the trend and momentum are broken. So you've gotten basically until about 58 bucks to buy this on the dip or not sell it. But once it gets below there, it's going to create a selling acceleration pattern. One thing that throws me off is that I just can't. This is getting stupid, Gianni. There is no fundamentals here. This is
Yeah,
just people shoving capital. They're saying, I'm frightened of tech. I'm frightened of CB Richard Ellis. I'm frightened of these stocks. So I'll just shove all my capital into Coke, Pepsi, and Walmart and close my eyes and pray. This is how you know the pricing mechanism's broken. It's broken because you know that Walmart isn't worth this much. They don't make it, they can't justify a multiple near 50 on Walmart. They can't, because they're never going to grow more than 4 or 5%. So this goes to show you that fundamentals ain't what they used to be and that psychology runs. But all of a sudden, if Walmart comes out and goes, we have problems, AI is creating a dislocation, I mean, they could open this stock down $30. And once it does, it's not going to bounce. The reason why it's not going to bounce is because they're going to liquidate everybody who's long on margin. And then you're going to get the algos to attack it to the downside. Then it'll drive it down into the low 70s. So
Yeah.
to me, this is the problem with the market, is that people wake up every day and they go, what's vertical? Oh, that's vertical. Let's just go buy in and buy it. Is it 90 degrees? Let's go
Yeah.
buy a 0 DT and jam it higher. This is not, the market is not an Xbox, man. The market
Why
is,
not?
well, it's trading that way, but
Yeah, right.
what happens eventually when you play this type of game, this is what happens when you play this type of game. You get the Disney, which was one at 280 that can't find its footing anymore. Okay. Remember that one? The Disney,
Yeah.
where everybody had to own it. Like, I can pick out 50 stocks, like Duolingo. I love Duolingo at 500. Wait a second. It's 107. It's a piece of crap. Get me out of that thing. It's just like the pricing mechanism doesn't matter. All that matters is narrative, momentum, and how do I feel in the moment. This is dangerous. Or do you disagree?
No, I'm with you, but I do want to point out something on Duolingo, because this stock is a fundamental analyst's dream. Consistently growing revenue, consistently growing earnings, beating on estimates, strong, revenue, strong balance sheet, all that kind of stuff. And look at the stock, guys. Look at the stock. Perception matters more than reality. And so, I like how you brought up that example of Disney. Because, how many people like got Disney stock as a gift, like when they were kids from grandma, right? But I don't know, that stock has some serious problems. And I guess my question to you, right, is, and we'll find out when the time comes, is like, how does Walmart actually screw up? Right? They're a retailer. And it's one of those things where even if the economy slows down, like, people need groceries, and Walmart does have lower prices. That is the appeal in this environment. So when you have tech lagging, when you have financials breaking down, and you have a stock like Walmart surging,
Yeah.
that's not what you want to see if you're a bull.
No.
So yeah, Walmart's a great stock. I think it looks awesome right now. I mean, again, like, I haven't been long Walmart. I'm not going to come in here and chase it today. That would be foolish. However, I will say, keep an eye on earnings next week. That's going to be a week from today. If Walmart needs a reason to pull back, that could very well be, or if you have a blow off top, right?
Right.
So I'd watch earnings, because we're not done with earnings season yet. And I think this next week or two could be pretty dangerous.
Interesting things. But I see them starting to sell 52-week lows and panic again. They're not selling the 52-week. The only 52-week high they're selling was the ones I told you. I'm short KNX and CSX. They're really starting to beat on KNX. It's a way overpriced stock that guided lower, and it bounced for one reason. Because the chart's financial porn. It looks sexy. That's why. I mean, this is how people think nowadays. It's going to catch up with you one day. All right, let's do the individual stocks. Gianni, I asked you if you own this. You said no. You said you have nothing to do with this anymore, but we gotta mine this out. I call it bait and switch. Now, you know what bait and switch is in advertising?
Yes.
Because here's why I throw this out there. Because AppLovin, which has now become App Hatin, AppLovin, like McLovin from that funny movie with Emma Stone. AppLovin is an advertising app. That's what it is. It's an advertising app that tracks advertising and curates and pulls in data for metrics and stuff. So AppLovin reported last night. You got to see, this is an incredible, I call it bait and switch for a reason. So AppLovin's getting absolutely torched today. Okay. They're just knocking it down. $88. The expected move was $34. I covered this in my mastermind yesterday, and I told everybody, if you owned AppLovin today and you didn't hedge this, I would fire you. You cannot be naked this. I said, because this is the type of stock where it's going to either go up 80 or it's going to drop 80 or beyond. And I didn't know which way it's going to go, but I can tell you this. The business is such that the path of least resistance always dominates. Always. So whatever they reported, we reported 324, which beats that 289. Did it even matter? It didn't matter, because the momentum is what drives the market. So if this company had beaten by $7, it doesn't matter. It doesn't matter. People already, it's confirmation bias. They already made up their minds they were going to beat the crap out of this, which goes to my point. Like, Gianni got out of this in the 600 range. Gianni, the whole point of this business is simple. You buy low and get the hell out high. Why do people sit around and go, I'm going to play that buy and hold game? Would you have held this if you're out of your mind?
No, I mean, so what I like to do is like, I'll scale out on the way up. I do like to buy high. It sounds kind of silly, but I'm a momentum guy. So I like to buy high. I scale out at higher prices, then I just keep raising my stops. And a lot of times I just let the market stop me out. So like, I don't really obsess about selling the absolute top. For me, there's plenty of meat in the middle, between the low and the high to make a living. But yeah, AppLovin, this was the AI darling, right? In fact, when we all got together in Arizona 2 years ago, crazy to think it's been that long already. I specifically used this stock in the presentation I made when I was talking about a very important principle, which is called relative strength. And it's basically the idea, you touched on it, the strong get strong and the weak get weaker. So the trend on this one already flipped, right? So when this stock, you topped out in December, you sold off, you had that secondary rally up to what day?
Uh,
January 29th.
I
January
think
29th was that big lower high.
right
Okay.
there,
Yep. Yeah, that was the
565.
day. I was like, hey, something's broken in tech. And then you got crushed. You took out that low from November 21st. This stock's going to 300, Professor. The
Oh
bleeding is
yeah.
not over. It's
Oh,
going to
maybe even
300.
200. Might even be 200.
Maybe, yeah, maybe. Yeah, maybe 200. Yeah.
I can hear the cries already. I hate this company. I'm never buying them ever again. Oh,
Yeah.
really? 'Cause when they say that, Gianni and I'll swoop in and probably buy the hell out of this thing,
Yeah.
write it
Yeah.
back up. So like I said, I look at this stock as the poster child for every stock's going to go through this. Walmart, I don't care. Anything that's parabolic. Like McDonald's won't go through this because McDonald's doesn't look like this, right? And
Right.
neither does AT&T. But stocks that are parabolized that go to like 100 on an RSI, if you didn't sell this, Gianni, I'd sue you. Like if you were my
Sure.
trader, I'd just fire you. You out of your
Yeah.
mind. Get out of that thing. How much high? It's hitting the top of a oscillator ceiling. It means it's so overowned that when they unwind it, it has to crash. It's just the law of numbers.
Yeah.
So AppLovin today, I call it bait and switch because intraday, I don't know if you saw that. You have to see this. Look at last night's action. If you don't think this thing is like a monkey, somebody walked in after hours. Let me give you the 2 days so you can see this. Thought he was smart. I'm smarter than the market. So they went in on the second day and they started playing with it. And in after hours, it bounced up to 440. And they figured, I'm going to buy it right there. And now, okay, they're down 70 bucks. I always say, never trade after hours. It's the most dangerous thing I've ever seen because they can flip it the next day or they can continue it the next day. And I'd rather be in control than not in control because the liquidity is really terrible here. So AppLovin was once a Gianni darling, and Gianni, I think you made a few %100 gain on that thing. If I'm
Oh
not,
yeah, it's been one of the best trades I ever had here at Theo. So yeah,
I got to give props, man. You scored
yeah.
huge on that one, but at least you knew one thing: get off the train because the train doesn't last
Yeah.
forever.
But
So
see, here's the thing is like I really, and this is something that sounds silly when I say it like this, but it is a problem that a lot of traders face is they become emotionally attached to a stock.
right,
And they're just like, oh, I made money on an AppLovin. I never want to sell it. Warren Buffett said to never sell.
well, that
Okay,
stock.
well, you're not Warren Buffett, one. And two, I treat these stocks like numbers and letters on the screen. I don't care if a stock goes up 10x or goes to zero. If it fits the setup, if you have a pattern, if you have a good trend, if you have positive momentum, if volume is favorable, the timing lines up, you take a position. If not, it doesn't matter. And you're allowed to have, you know, you're allowed to not have an opinion on a stock too. I tell people that. You could just say, hey, I have no idea what's going on here. It doesn't fit any of my criteria, so I'll just look for the next one. So yeah, AppLovin, it's kind of crazy to see this one implode. Because I'd started buying this stock. It was like around the first time I bought it was around like 30 bucks. I didn't hold it, I was in and out multiple times. I didn't buy it at 30 and hold it to 750 or whatever.
Right.
But yeah, no, it was really just like a really good example of strong stock getting stronger. And then, when the theme of a market blows up, it's usually those leaders that bring everything down with it. So this was a big warning signal for the overall tech sector, no doubt.
Yep. All right. Next one is Cisco. I call it marginal results. Now you're not going to get this pun, but let me reveal it to you. So I was going to take a short position ahead of Cisco because I did last month and did really well. I made like $4 bucks, but I don't like trading ahead of earnings because I just never know what's going to happen here. Okay, this stock's dead. This is a blow up.
Yeah.
Gianni, this is what we call the other cluster FUCK blow up. It's done. You can't, this is toxic. People say, well, what's the problem? Okay, they earned $1.04. The estimate's 82 cents. So let me spell this out to you as a person who covered tech stocks on Wall Street.
Yeah.
What's the dirtiest word in all of technology? Margin compression.
Oh yeah. Oh yeah. Oh wow. Yeah.
Margin compression, that stock will crash.
Yeah.
They said the word. They said, we have problems with margins. We can't keep up margins, even in our AI products. That was enough for every trader in the world to head for the exit and go, I'm done with this, and blow out. That's why I call it marginal results. What do you think of Cisco? You want to buy this one on the way down? You want to try this one?
No, sir.
Okay. I want to clear the air on this. Like, you like technology. I love technology. I don't buy on the way down, and I'm not buying a stock that trades at 29 times earnings. This stock is like old school. It's been around for 35 years. Okay. It's like Don says, people buy Apple because it's a warm hug. Apple is a bond. Apple is like a CD. I'm just buying Apple, even though I know there's no growth there and the stock's well overpriced. I'm buying it because it's Apple. It's what they call in the business, they call it affectation bias. This is the same thing. You bought Cisco because it was on the way up. You did no friggin' research whatsoever. And if you're a manager who owns this, who bought anywhere in here, you're like, oh no, there goes my alpha. There goes my Ferrari bonus. You lost it in one day.
Yeah.
One day. So this continues with our narrative. Tech's got a problem, Mr. Di Poce. There's a problem.
Yeah.
And I'm not saying every tech has a problem. I'm just saying there's a problem with Microsoft. There's a problem in software. Now there's a problem in hardware, because this is hardware. Yeah. And I said last week, because I got an email from a TheoTrade member, what do you think of IBM? I said, IBM's the short of a lifetime. Now you believe me? I was like, look, IBM's the short of a lifetime because IBM is hardware. It's hardware. Look, see that breakdown? That's the setup for a crash in the stock. Now, I'm not saying the stock is wildly overpriced, but at 23 times earnings, it's not low enough, because IBM used to trade at around 12 to 13 times earnings, and they used to pay a 5.5% dividend. So that dividend at 2.5% tells you that IBM is a bubble. But if that dividend goes back to 5%, Gianni, it scratches my itch to buy it. That's the thing I'm telling you about IBM. But again, you now have problems in hardware. You got problems in software. What's next? What's our favorite sector? Semiconductors. So semiconductors, Gianni, now it's done. Now the rally's over. That's the nail. That's it.
Well, it's chips. I actually got whipsawed out of a short in chips. I took a short in chips like last week, and of course, I was in the Trinity trade yesterday. I was like, guys, we're gonna get stopped out at the lows here, because I'm not the type of trader. This is a big part of being a professional. Even if you think the market's gonna move a certain way, you have to respect your stops. You have to respect your targets, because I don't know better than the market, and I'll never pretend that I do. But I have been looking for chips to top out, and I had a short on in SOXS, the inverse leveraged chip ETF, and I got stopped out yesterday on it, and I do think. What's that?
You did?
Yeah. I got stopped out yesterday. And I even told the guys in the Trinity chat, I was like, unfortunately, this thing's bottoming out. Like, we're gonna get lows. And it looks like that was correct. So, but one of the issues that has prevented chips from breaking down has been Micron. Micron's been so strong because whether you look at Broadcom, Avgo, or AMD, they've been weak long enough to where it's showing some problems in the chip sector. NVIDIA hasn't fully broken down. It does look like NVIDIA is forming another lower high today. You do have NVIDIA earnings coming up at the end of the month. And that could turn out to be a washout event, or if we're already breaking down, maybe you have a good bounce in NVIDIA then. But I think chips, I'm with you, is the last domino to fall, and they're under some pretty heavy selling pressure right now, and so is the overall tech sector. Wow, yeah, QQQ and NQ just getting absolutely liquidated here, and bonds just took out yesterday's high. So yeah, I mean, there's some real selling going on right now, and so we'll see how this. Now we're going into Friday too. Tomorrow's going to be Friday, and so you get a weekly close near the lows of the week. Look out below. We'll see what happens.
I hear you. I'm sorry. I'm just placing a trade. and I'm going to go buy. I don't want to mess up my screen, but I'm going to take a small gain on KNX, simply because I've made way too much. There it goes. I made too much money on it. So when I make money, and I'm short like 150 shares, right? 100 shares, pardon me. So I just took out 25. Gianni, I scale in and scale out. I never sit there going, I'll let that milk, because they could just bounce it right back up and wipe away all your gains. You never know in this business. So I take,
Yeah.
I scale and scale. All right, I got 2 more stocks to hit you on. I got to get a laugh out of you on this one, please. So I've learned not, because I used to be a retail analyst, not retail, but I covered retail.
Yeah.
I covered clothing. Massimo, remember Massimo? You ever hear Massimo?
Oh yeah.
I covered Massimo. I did Bath and Beyond, which went belly up. This was my like coverage area, like small, But I also did individual companies. So Crocs reports yesterday, and it's a plastic shoe. I won't wear it.
Hideous
My daughter
shoes.
has a pair, whatever. She loves it. I see it in airports. I see it everywhere. I see it in the gym, like they put on socks and wear Crocs. The stock was savagely destroyed ahead of its earnings, but they got a foothold. You like that pun? Foothold? Terrible.
Yeah, yeah.
I'm
Clever.
sorry. Yeah, very clever.
Didn't.
So Crocs reports, and I'm just want to get your feedback on this. Not on necessarily Crocs, because it's up 16. Okay. The stock itself had pulled in from 90 to 85. Now these are monster earnings. So 229 beats the 191. The stock is not sitting at a 52-week low, but it's enough where you can get a massive gamma squeeze. Stock is up 16 and a half bucks, 20%. Okay. Obviously a gamma squeeze. Company delivered better than expected numbers, gave really good guidance. Okay. My question to you is that it's not a one size fits all. Another pun. What retail stocks do you think, in your purview, would be something that somebody should look at on the long side? And what would you look at on the short side? I can't buy Nike because it's a mess, but this is a stock where I would actually consider buying. You also have Birkenstock coming out, BIRK. BIRK is starting to come out and report. They're going to report they reported already today, so they basically were in line. Is there any retail that scratches your itch, or you're like, no, I'm done with this altogether?
Um, let's see. Right now the entire sector is facing some heat. Yeah, so Crocs, that stock's actually, it's a good trader stock because you look at its long-term history, big moves both directions. So really good stock to trade. But it's funny that you bring up consumer discretionary or retail, because I've had a bunch of price alerts set on numerous names. Basically, hey, if this stock gets above this certain price, I want to know. But as I just went through a bunch of them now, a lot of them have actually failed to hit. So like
Can you
they
give me
haven't really been on my radar as of late because they topped out just before hitting those price alerts. So, I look at what's going on in staples. I don't think this is an environment where you want to be in discretionary. You want to be in staples right now. And if you're not already in staples, you're too late. Just wait in cash. The opportunity's coming. I think you'll be able to scoop up discretionary and retail stocks for significantly lower prices in a few weeks here. So I'd wait on that sector.
Well, would you? I mean, this is not a dumb question, but would you consider at some point shorting consumer staples, or just no way, you're out of your mind? Come on now.
No, because I mean it just broke out, right? I mean Staples, you actually built, Staples went sideways from the end of 2021 up until basically January. So that's a big, beautiful base. I would not short Staples. I'm just, I know Don. I think Don did recently and with some success. I don't remember, but it's one of those things where like the trend is up. I try to trade with the trend most of the time. Like, yeah, I have my hedges on now for the overall market, but that's like, a really short-term tactical type trade.
Mhm.
So yeah, I wouldn't short Staples because I think it'll, even once everything settles down and the market bottoms, I think Staples won't necessarily start a bear trend. They'll probably just go sideways again.
Well, I'm actually like I'm long a couple of retail that not are doing well and a couple that are really doing well. But for me, I think shorting consumer staples is okay, but not the sector. Individual, you can short.
Oh, sure.
So I'm the Genesis call put on a buy alert. This was a buy alert at 102. We made this call at 102. So we're doing well with that. I'm gonna let that run
Oh,
for a while.
nice.
Oh, it's got to wait. It's not even close to a top. I mean, the stock collapsed from 136, and they consistently beat their numbers and raised guidance, and then they lifted their dividend. But because they bought Tylenol, everybody crapped the bed and threw it in the toilet. And the thing is, Tylenol is going to make them $4 billion. So people overreact. Gianni, that's just what happens when you don't know how to read a balance sheet or read an income statement. You're really at a deficit. You just have to know how financials work. So I went in and said, okay, when this thing bottoms out, I'm going to buy it on the breakout. So I bought it on the breakout right there. So I'm going to let that run. I also own General Mills, which everybody knows about. Johnny, I'm going to sell General Mills when it gets to 75 to 80, because at that point, Goldman Sachs and Morgan Stanley are going to upgrade it and say, now's the time to buy. Okay. This stock is the cheapest stock in the S&P 500, not even close. And it's starting a multi-year run. I'm right at the bottom, buddy. That's me right there in that 45 at the bottom. I'm going to let that run for a while. So I'm not saying you can short consumer staples. I never said that. I'm saying you can short some consumer staples, but you can't short all consumer staples. That's what I'm
That's
talking.
fair. You know, it's interesting you're pulling up General Mills because I actually have a pretty cool story. I made a small fortune trading grains in the early 2020s.
Mhm.
And so General Mills, right? They obviously are involved in the grain market quite a bit. And so I've actually been watching the grains right now, wheat, beans, corn. I think we're coming out of a bottom on those. And usually when grains start to run, it says a lot. So, you know, I do want to add some context to this whole situation because I think we're going into some sort of liquidity event near term. And I think it's going to bring, you know, oil prices down, rates down. But once that reset happens, I think you could see a situation where crude oil, you know, becomes a very hot commodity and that spills over into other commodity markets like grains and whatnot. We're not done with the inflationary beast. It's still lingering in the shadows and it's going to come back out when the time is right. So yeah, I'm watching grains pretty closely there now because I'm looking to kind of build some exposure in that asset class actually.
Okay. Well, I'm having a really good day on the short side. Unfortunately, on the long side,
Hey, guess what? Me too, Professor. Can you believe it? We're both short the market and we're both
I
making money
know the
short.
shorts are working, but the longs, no, they're not working very well. Some of them are working. I mean, a couple of my longs are running. That Kimberly Clark, Sprouts Farmers Market. But again, it's not. I don't worry about day to day. I worry about quarter to quarter. All right, last one
Yep.
before we got our last 3 minutes, because this went by fast, by the way, and I have to do a Genesis cog at 11. Something's brewing. Got the pun there. Do you get the pun or not? Come on now.
I do. I mean, I
All
don't
right,
know. Do
put
you
this
come
one.
up with these on your own or do you use like
No,
AI to help?
it's all out of my brainchild. I'm like an idiot savant. So
That's pretty clever. I got to give it to you.
So I bailed on this in the 70s. And you're like, why? Well, first off, when I originally bought this, I bought this at 45. I did for Genesis Cog. Then we sold up here at around 65. We got out. We made money. Then it dropped back down to 60. So guess what we did? We got in again at 60.
Yeah.
Then it goes to like 69, 70, 70, 72. So I bailed on all of it because I don't want to hold it. Now it's up another $9. Now I don't feel sorry for this because I don't play the Monday morning quarterback game because you can't. They could have missed their numbers and drive it back down. But this goes to show you, like, this is what I call the stupidity of Wall Street. Just stupidity. Because the chart doesn't look sexy, it's not sexy. There's no momentum, no buying. Oh, yeah? Because by the time it finds momentum, Mr. Di Poce, that's what it looks like. So if you want to get rich in this business, you got to do what you and I do. You got to buy it before it moves. Because after it moves, the risk goes up, the risk of a reversal goes up, and you basically cut yourself down from your profitability. So do I rue the fact I sold this stock in the 70s? No. But it just goes to show you that you can't always rely on charts for all your decisions, correct or incorrect.
Yeah, I'm a charts guy, so yeah, we're gonna have to disagree on that. I see. I think that everything is reflected in the price, and even when you get those gaps lower, or gaps in the direction of the trend or the opposite direction of the trend. I think that usually there's momentum deterioration. There's signs. It's not like nobody ever saw anything coming ever, right? Conditions change before the price does.
I couldn't agree more. I couldn't agree more. But at this point, I'm just gonna like suffer through my longs because they're so low and they're so cheap and they're so deeply oversold. I'm not gonna sweat them. When they turn, they'll run. Again, markets pick up on momentum, but I saw today because I knew when Don paired us today, he paired us for a reason,
Yeah.
and that reasoning is because you and I see trouble. and I see the trouble. I see the market topping, the monthly's curling over.
Yeah.
So you see the monthly curling over. When that MACD catches up, okay, I don't want to hear from you like, oh, it's down 200. Are you out of your mind? They could literally take this all the way down to 4,000. I'm not saying they will. I'm just saying if they sold this out, completely sold this out to an RSI of 30, let me bring this to your attention, reverse engineering RSI before I leave. All I'm going to do is I'm going to switch this to a 30 on a monthly. Okay. When this hits, and this is going to scare a lot of people, when this hits 4112, give me a call, Gianni. 4112 is telling you that on a monthly RSI, that's when it's oversold. So when you tell me it's oversold at 6,000, sorry, man, I'm not on your team. That's where I disagree with you. You got to get it down
Yeah,
there.
I don't think we're going to get there. I don't think we're going to get there.
I don't
So
think we're gonna get there either.
that is our disagreement of the day.
Okay, I don't think we're going to get there either. But that my point is that what can happen will happen. You're telling me you saw AppLovin or Duolingo go from 565 to 100? Nobody did. I believe the market goes out of its way to screw everybody as far as possible to make you think you're smart when you're not. That's what I believe.
I'm with you on that.
It's a humbling mechanism. It's very humbling, is it not?
Absolutely. Yeah.
All right. So any last thoughts before I turn this over to Mr. Chapman, who's waiting in the wings here?
No, just tread carefully, wait it out. The good times are coming back, but right now, downside risks keep rising, so you just have to wait. That's it. More money is made in waiting, and if you own cash, if your cash right now and stocks are going down, you may not feel like it, but you're actually getting richer. Don't forget that.
Yeah, I'm just going to wait this. I know there's a lot of nonsense going on here where they're chasing performance. You will know there's a bottom when all of the utilities and all of the staples crash and burn. That's when you know there's a bottom. But until then, you're not at a bottom. Got it?
We got it.
All right, Brandon, it's all yours. I'm going to turn it over to you. I got to do just talking 20 minutes.
We're talking correlation. All right, we'll see you, folks. See you guys.
See you, Brandon. Thanks, guys. Thanks,
folks, guys.
Prosper. Great
Whatever.
session.
All right, have a good one.